and welcome back to ASX Market Watch. Thanks very much for joining me today. I'm looking at 5 different charts, so hopefully I'll be adding a lot of value to just your watching time. It'll only take a couple of minutes, but I'm looking at 3 indices and also 2 individual trades. One is a long trade and one is a short trade. They're actually trades that I've personally taken. But the 3 indices I'm looking at as well are the FTSE, the ASX Top 200 and the Dow Jones. So just to get a really wide overview of where the world is heading as a whole, I guess, and which parts of the world are outperforming other parts of the world. And what we're starting with is the FTSE. Now, the reason I'm starting with the FTSE is because last week and over the last couple of weeks, I've said that the FTSE has been in the most bullish position out of the ASX Top 200 and the Dow Jones and the FTSE. This is definitely without a doubt. And over the last week, it's actually just started to really take off. So I'll show you why I called it as a bullish figure. The first point of call. Anyone who's looked at any of the videos that I've ever done will know about long-term trend lines, and a longer-term trend line usually acts as support and resistance for an indice or for a stock. And in this case, in the FTSE, which is what we're looking at here, this is a daily chart. This has really provided a lot of solid support and resistance. And the reason I've called it as a bullish stock over the last couple of weeks is for this reason. It was trading above the longer term downtrend line, as you can see. So this is the longer term downtrend line here, and just recently it was trading above it, probably over the last 3 weeks. Not to mention, there is another factor involved here, and that is it was also still trading above its longer term uptrend line. So around this level, this is where I was saying, look, I mean, the FTSE, without a doubt, was the most bullish of the 3 indices. And only in the last week, it's probably jumped about 10% alone, which is massive. It's fantastic. And obviously, in your trading, you could expect that 3 out of 4 stocks would follow the overall indice of the FTSE. So if you're trading in that area, then definitely you probably want to be trading on the long side. If you were to follow that theory, of course. So that's a really simple way to look at the FTSE. Now, the dark side of my methodology is that looking at the ASX Top 200 and the Dow Jones, now these two are a little more tricky at the moment, and I want to show you why. The chart here is the daily chart of the ASX Top 200. Now, again, very simple methodology. All I've done is draw in our uptrend line here. Now, this uptrend line was crossed on the 22nd of January. Oh, was it the 25th? Okay, my apologies. The 25th of January 2010. So it was actually crossed then. That's when we called this latest correction. It's probably dropped maybe about 10%, around about 10 to 12%. So it is in correction mode, yes, but when do we figure out exactly when it's broken out of that correction mode? Well, this is the tricky part. Usually what I would use personally is the crossing of a downtrend line. So for instance, a downtrend line, you would usually need 2 to 3 solid peaks to be able to draw your line, and that's the tricky part. We don't actually have those peaks at the moment. In my last market watch, I also suggested that you could use a 45-degree angle line, which the market is just starting to cross now. But in reality, we've still got this really this sideways range that the market hasn't really solidly broken out of. If we had a solid downtrend line that it could break above, then that would be a great signal for me personally. Apart from that, really what we're seeing is a sideways range. Now, looking back over history at consolidation periods in the overall market, the longest consolidation period that we've had is around 6 months without a solid breakout. So at the moment, we could probably be looking at 1, 2, 3. We're really coming up to the 6-month period, probably by the beginning of April. And if we haven't seen a solid breakout by then, really we'd be setting a new record. But so yeah, this is it's a fairly tight range of about 10%. It's a 10% trading range, and really, I'd like to see a break above a solid trend line, which hasn't occurred yet, or a break out of this trading range to really give us a good solid indication on the ASX Top 200. Now, that doesn't mean that there aren't trading opportunities, and I'll just talk about that in a second, because there still are, and it's actually not too hard to spot. Before I do that, though, I'll just quickly look at the Dow Jones. Dow Jones, here are our beautiful trend lines. I'll just draw them in. Okay, there we go. Well, the main solid one is our downtrend line going from 2007 to 2010. And as you can see, what the market in the Dow Jones is doing is very similar to the ASX Top 200. Those two markets are very, usually quite closely related. And what the Dow Jones is doing is it's actually just snaking, if you can see that there, it's just snaking around its longer-term downtrend line. And again, in this consolidation period, very similar to the ASX Top 200. So again, this doesn't mean that there are not trading opportunities in a sideways market. So for instance, in the FTSE, obviously the trend is very significantly up. You'd want to be trading with the direction of the trend, which is, for instance, 3 out of stocks might be following that upward direction. So hopefully most of your trades would be bullish, following that overall trend. In a sideways market, we really get the best of both worlds. We could get stocks that are breaking upwards, and we could get stocks that are breaking down. Now, I want to show you 2 different trades that I've taken recently, just reflecting that. And you can get the best of both worlds, because as a short trader, you would get the interest accumulating to your own account. As a long trader, you still get the benefit of dividends, but you would be paying interest. In many countries, that interest is tax deductible, which is a great thing. And you could do that using CFDs. You could do it using options if you wanted to as well. Personally, I use CFDs. So this next chart here is a short chart. This is a short trade that I've taken recently in Telecom Corporation of New Zealand Limited, TEL. And the reason why I've taken it is this little trend line here. I'll just enlarge that chart. There we go. So it's just basically a breakout from a range. You could have entered if you were a little bit more savvy than myself. This is an earlier entry signal, and you could probably have entered around about $2.10, maybe in October 2009. Me personally, I was a bit late off the cuff, which often does happen. I'm only human. And I've entered at around $1.85, which is a breakdown through this little range here on a nice flat trend line. The market has continued to go down. I would probably continue to hold my short position. And as you can see, we've got our sweet downtrend line there, which I'd be waiting for it to cross to exit my stock or exit my short trade. And by the way, at the moment, from where I've entered at $1.85, now I have my stop. My stop loss has been moved to that point. So technically, my stop loss is at break even. It's basically what you call a risk. So if it continues to go down, happy days for me. If it doesn't continue to go down, I haven't lost a damn cent. In fact, I've probably made money because I've still got the interest, the short interest coming into my account from a short trade, which is just fantastic. So this is great stuff. The next one I want to look at is the long trade that I took a couple of weeks ago. I showed you guys this one. I actually showed you as it was happening. This is the long trade in CSL, and CSL Limited on the Australian chart as well, on the Australian stock market as well. Now, when I took it based on a weekly chart, just to make it, because trading off a weekly chart really does have its benefits. You don't have to look at the market too often. In fact, probably once a week, which means you get to enjoy life, which is really the whole point of this whole exercise, I think. So the reason why I took it was it broke above this longer term downtrend line. And probably my entry was about $34, and if you were a bit more savvy again, on a daily chart you could have entered around $32.25. This is on a daily chart. You did get your earlier entry signal. Again, I didn't take that personally. I waited for a bit more confirmation, again probably because I'm still human and have my fears and hopes just like everyone else. But the market has definitely continued upwards, and again with CSL, as my entry was around the $34 mark. My stop loss for this trade is at break even as well. So what that means is, again, it's a risk-free trade. The market's continued up. Anything past this point is gravy. It's just icing on the top, so to speak. And if the market does reverse and come back down, then it will hit my stop loss at my break-even point for a potentially risk-free trade, or a theoretically risk-free trade. I'll still be paying interest on the CFD position, of course. So, guys, thanks very much for stopping by. Again, how good is it talking about the market? I think it's a fantastic pastime. I mean, even if it's a small amount, get in there and just have a go. Learn as much as you possibly can. It can have great rewards, and it can really help you grow as a person and as a trader, which are both good things. So thanks very much, guys. Stop by the website if you're so inclined. It's asxmarketwatch.com. A lot of great tools there, a lot of free research. Other than that, I'll see you next week. Alright, bye now.